All right, welcome back for this morning's Bull Run, where we go over the top stories of the day. And today we will be joined by one of my favorite guests in the whole wide world, Joe Eppel from Xapo Bank, to help us break it all down. Joe, are you with me, my friend? Can you hear me this morning?
I can hear you loud and clear, Hank. Pleasure to be here.
There he is. Oh, good to see you, Joe. How's everything on your end?
Everything's looking pretty good. I've just come back from a good 2-week break, refreshed and ready to, expand the world of Bitcoin dominance.
That's what I like to hear. All right, well, I'm going to give you a quick 2-minute break, and we'll be right back with you to chat about this first story. So stay put, all right? Okay, so it is September, as we are all aware, which means for Bitcoin, usually the Grim Reaper is nearby sharpening his scythe. See, across the last 12 years, Bitcoin September returns averaged 3.77%. That's the worst month of the year. 6 straight years of losses from 2017 through 2022 turned red September into less of a statistic and more of a reoccurring nightmare. The hits came from everywhere, really. In September of 2017, China banned ICOs, South Korea piled on later that month, and suddenly every degenerate token sale was as illegal as a North Korean McDonald's. By 2018, Goldman Sachs abandoned its crypto desk, a story later labeled fake news, but not before Bitcoin had already plunged below $7,000. In fact, if you take a look at this chart we have here on my left, you can see red. The streets run red with blood in September. It's not a great looking month, but the last 2 years have seemingly proved otherwise, as we have seen gains during the month of September. But as you can see, from 2017 through 2022, there was blood on the street. So it wasn't looking good, but hopefully that was old news and we're in a different time now. Because, well, remember back in 2019 when Bak's long-hyped Bitcoin futures launched with all the excitement of a high school AV club dance, volumes were weak, the debut was called a flop, and Bitcoin cratered from near 10,000 to below 8,000 in just a matter of 3 days. By September of 2020, capital rotated into Ether during DeFi summer. In 2021, China swung its ban hammer again, outlawing mining and trading completely. And in 2022, the Terra Luna collapse that had already left smoking craters in portfolios before the Fed added a 0.75% rate hike in September to kind of finish the job. Then 2023 happened. The skies cleared. A federal appeals court smacked the SEC for being arbitrary and capricious and rejecting Grayscale's ETF bid, which pumped confidence back into Bitcoin and gave us the first green September in years, up about 4%. 2024, it didn't just break the curse, it threw it in the shredder. Bitcoin clocked its best September ever last year, up nearly 7.5%. Spot ETFs were approved, daily trading volume was in the billions, the Fed cut rates. Now it's 2025 and the stage is set yet again. ETFs are sucking up coins like ShopVax. Companies are adopting Bitcoin treasuries just to survive. Powell, in his latest Jackson Hole speech before retirement, swapped out his trademark pain warnings for something softer, finally realizing maybe threatening households every year isn't a winning PR strategy. The Fed meets again later this month, and a rate cut is widely expected. Historically, liquidity go up tends to rhyme with Bitcoin go up, so we'll see how that all plays out. We're bringing Joe back. Joe, September has historically been Bitcoin's version of allergy season, constant pain and regret. Do you think this year's setup with ETF demand and a potential Fed cut is finally enough for us to break the September curse? What do you think?
I sincerely hope so. I mean, I have a mixed relationship with all of these bloody Septembers. It's my birth month, so I take it a bit personally. But besides that, I think we're in a completely different environment than we were in the previous Septembers. We are, post COVID pandemic, and generally with the Fed looking a little bit more dovish and institutional demand up, and some of the best Bitcoin prices we've seen ever. I'm hoping that we do see a continuation of the newly established not so red September that happened in the last couple of cycles. But only time will tell.
That's right. I mean, we saw it was like 5 years in a row September was terrible. Right now we're on 2. If we hit 3 in a row, then I think we might be calling September something very different next year. 3 is a streak where I come from. That is often known as the turkey, like in bowling. We'll see if it plays out that way, though. With that being said, of course, we are eagerly awaiting these alleged rate cuts from Jerome Powell. Do you think that that would flip the script in a big way for Bitcoin this fall if we do, in fact, get those rate cuts? Or are we maybe setting ourselves up for another pump and dump cycle heading into October?
It's hard to tell. All I can say is, as you said, usually liquidity go up means Bitcoin price go up. And if we do see a rate cut, we will see a lot more, well, cheaper money available to your average consumer. And that will hopefully signal a positive result for Bitcoin. That being said, it's not just dependent on these things. The whole world, as we've learned in 2025, can turn on a dime. So let's cross fingers and hold thumbs and hope for the best. But I do think the signs are in place that we could see another good September.
Yeah, it's certainly looking like that. But as we know, for better or worse, traders love patterns, even if they're based on what seems like superstition. So do you think the Red September narrative is actually impacting the markets now, kind of like a self-fulfilling prophecy? Or is it just all noise until liquidity flows decide the outcome?
It's a tough one. I mean, I think, as you said, not only traders but humans love a pattern and love to mimic these. I do think with some of the fundamentals that we're seeing, the slightly below average jobs report in the US, that does indicate likely, hopefully at least, a bit more pressure on the Fed to cut. And I think trends are one thing and patterns are one thing, but if the fundamentals have changed and if we do see the building blocks for people having more money at their disposal and a increased interest in Bitcoin, maybe we'll break that pattern and form a new one. We'll have to think of a catchy phrase for September, considering we already have October. But, we can worry about that at the end of the month. We still have time.
Yeah, absolutely. I'm really hoping we get to think of something new if, in fact, we do have a good September month. But it is always interesting to me, like the psychology element involved in this, right? Like, is this just a self-fulfilling prophecy? People are like, oh, we know September is traditionally bad. So I wonder if people are actually pulling funds out of, the market because of that. I don't know. It's human psychology. It's always so interesting to me. All right, stay tuned, Joe. We're going to go over this next story. We'll be right back with you here because businesses in 2025 are done pretending. According to River, companies are plowing an average of 22% of profits straight into Bitcoin. Yes, they're profits, not fun coupons, not marketing spend, but actual profits, and they're turning them into orange coin. Take a look at this graph released by River. It shows real estate firms leading the pack with nearly 15% reinvested. Hospitality, finance, and software are all throwing 8 to 10% at it. And the wildest part, even fitness studios, roofing companies, and religious nonprofits are stacking sats. Praise be! Now the collection plate now accepts Lightning. Now in total, small and medium businesses have grabbed 84,000 Bitcoin in 2025. That's about a quarter of what the giant institutional funds and corporate treasuries hold. Or in other words, while Michael Saylor hoards like a dragon, mom and pop shops are sneaking in behind him with their own little piles of gold. Most of these adopters are tiny. 75% of River's clients have 50 employees or fewer, which makes sense. If you run a 5-person yoga studio, you don't need 3 board meetings and a risk committee to buy a few Bitcoin. You just click buy and hope your students don't notice the incense budget disappeared into cold storage. Meanwhile, S&P 500 companies are still acting like Bitcoin is Voldemort. Even if a CEO wants to buy, no one wants to be the first one to stick their neck out, which is why small storage units in Rhode Island are buying sats while Fortune 500 firms are still asking if blockchain is a flavor of latte. And no, most aren't going all in. 40% of businesses are only allocating between 1 and 10%. Just 10% are throwing more than half of their income at Bitcoin, but even the tiny buys add up. Last week, a self-storage company added 0.088 BTC, that's under 10 grand worth, bringing its grand total to 0.43 Bitcoin. Not exactly MicroStrategy, but hey, it's something. We're bringing Joe back. Joe, businesses are now recycling 22% of their profits into Bitcoin. I mean, we're talking even gyms, roofers, and churches are stacking sats. Is this grassroots adoption more powerful long-term than headline-grabbing ETF flows? What do you think?
It's an interesting one. I think you need both to show market confidence, but the fact that the smaller players, the small businesses are not only investing in their profits into Bitcoin, but are seeing it as a thing that they should be doing with their money in order to hedge against inflation or hedge against whatever kind of economic uncertainty they're seeing. Maybe hoping for a big payday. Could be a mix of all of these things, but I do absolutely think it is a positive thing overall. I think. One of the at Xapo Bank we get approached by people wanting to open institutional accounts regularly, and I think one of the things that we need more of is reputable financial institutions offering secure custody solutions, so that larger firms and your S&P 500s can actually have an auditable and a really legitimate record of their Bitcoin purchases and sales and holdings, and doing so in a completely safe and secure environment, which I know various players in the market do offer. But we need to start seeing more of that adoption from our larger financial institutions to shore up that confidence. So for now, I think this is a really positive sign. I think Bitcoin's always been for the people and for the grassroots, and it's wonderful to see people having that available to them and taking advantage of it. So for me, definitely a positive sign. But I do tend to see everything
Yeah.
positively. That's my optimistic view.
Yeah, no, totally. And we're seeing, mom and pop shops buying Bitcoin while these Fortune 500 companies we're talking about are still treating it like Voldemort. Do you think small business adoption is maybe the real Trojan horse that makes Bitcoin unavoidable for the bigger players later on?
I definitely like to think so. I mean, as you mentioned in your summary of River's study, the big companies, the S&P 500s, they have a huge amount of due diligence and hoops and bureaucratic steps that they have to jump through before investing in something that is still traditionally seen as a risk-on asset. And so it may be that there's a bit of a lag in terms of the larger institutions being able to officially adopt Bitcoin as part of their reserves or even just have it on their balance sheet. If we're seeing mom and pop shops doing it, though, it does show that there is a trend and that there is a demand for this outside of just your traditional consumer retailer or your average degen. And I think that's a really positive step. Again, go back a couple of years, I don't think your average mom and pop shop would have even heard of Bitcoin. And so the fact that today we're in a place where they're holding it, they're keeping it on their balance sheet, that's a really positive sign that general knowledge and awareness and availability is spreading, and there is demand for it. So absolutely a positive thing, and hopefully it turns into, as you said, the Trojan horse that makes the big boys follow.
Yeah, absolutely. And to your point, yeah, mom and pop didn't even know what Bitcoin was a couple of years ago. And the fact that now some of them are actually allocating profits into Bitcoin is a really positive sign, especially when a lot of those mom and pops are boomers who aren't really used to the old technologies so much. So I'm appreciating that, it seems like the accessibility or things are becoming more accessible to them. And obviously the word is getting out there. So love to see it. Another thing that Rivers mentioned was that according to their data, it shows that most of the companies are dipping in small. They're not going all in on Bitcoin right off the jump. Do you feel like that slow, steady DCA approach from businesses is smarter than the sailor style bet the farm model, or should they should be allocating more upfront early to try to capture a lower price?
I mean, it's really about your risk approach, right? I think Saylor is definitely the outlier in the world in terms of not only the money he swings, but also the aggressiveness with which he purchases Bitcoin. A very big bet that could well pay off incredibly well. But for sure, I think as any kind of responsible financial institution or any responsible business owner would be thinking is how can I mitigate my risk without exposing myself to a whole lot more. So I think an
Right.
incremental approach makes a lot of sense. And at Xapo Bank, we are a bank that offers a range of financial services, not just Bitcoin. But that is, of course, our primary value proposition. Keep it somewhere safe, somewhere that's been doing this for many, many years. And I hope to see some mom and pop shops approaching us.
Yeah, absolutely. And what's wild is, and I found incredibly encouraging, was that apparently only 6% of Americans even know that Bitcoin has a hard cap. And that's like the whole selling point, right? So it makes me wonder, like, is the real risk here not Bitcoin's volatility, but just kind of ignorance on a mass scale? And if so, how big of a catalyst will it be when mainstream finally catches on and does their research? Because I feel like that's when things always start clicking for people. It just takes a little bit of research, right?
Completely. And I mean, look, as we were discussing earlier, we love to see a pattern, right, as human beings. And once we see the larger institutions establishing a pattern of regularly purchasing Bitcoin and making it a part of their balance sheets, I do think that everyone will start to follow on and catch on, or even just be passively investing in Bitcoin without even knowing that it's part of the balance sheet of whatever S&P 500 index fund they are invested in. So definitely, I think it's also coming off of the back of a decade of FUD, right? Bitcoin has been seen as a pyramid scheme, a scam, a Ponzi, and only in the last couple of years has that narrative really started to shift from the likes of the SEC and the United States government itself, and the fact that that narrative has turned and we are starting to see positive results, I think shows that very much we are still early. And we are starting to see the positive, green shoots being reaped as a result of this turn towards Bitcoin as opposed to trying to regulate it out of existence. But let's see.
Yeah, absolutely. It seems, and not unsurprising at all, that the more information out there that comes out about Bitcoin, the more people begin to trust it as an actual asset class in and of itself. And our next story talks about that. So we're going to bring you back here in just a second, Joe. Because first, Cornell's Bitcoin Club asked 25 countries how much they trust Bitcoin. The average score, 4.67 out of 10. Basically a D+ if Bitcoin were a college freshman who skipped class to trade meme coins. Take a look at the results from the survey here. Nigeria came in first with the highest Bitcoin trust. Japan brought up the rear with the lowest score, which means Nigerians are stacking sats like their future depends on it, and in Japan, people would rather trust a vending machine that sells used underwear. Now, 10 countries even said they trust Bitcoin more than their governments. Brazil, Indonesia, Kenya, Lebanon, Nigeria, the Philippines, South Africa, Turkey, Ukraine, and Venezuela. If your national leaders are basically running the country like a bad group project, Bitcoin starts looking less like magic internet money and more like a plan A. Meanwhile, places like the UAE, China, and Saudi Arabia reported way higher trust in the government than in Bitcoin. So if you already trust rulers with your paycheck, you're not rushing to download a wallet app just yet. Across the board, people said Bitcoin is riskier than gold, real estate, or fiat. But here's the twist. 45% said it's no riskier than stocks, and 43% said it's about the same as corporate bonds. So half the world basically thinks Bitcoin is just Wall Street with a tan. When asked about Bitcoin's fraud protection, privacy, and trustworthy service providers, people mostly shrugged. Neutral answers everywhere, which is survey speak for I have no idea how this works. Please stop asking me. The final stress question was even juicier. In Turkey, India, Kenya, and South Africa, where more people admitted my finances control my life, Bitcoin adoption and trust went up. In El Salvador, Switzerland, China, and Italy, where fewer people felt financially squeezed, interest was lower. Apparently, financial pain is the best marketing campaign Bitcoin's ever had. Japan, Mexico, and Italy finished dead last in both stress and adoption. So if you're not stressed about money, you're not stacking sats, which ironically is why you might want to. Bottom line, Bitcoin's global trust rating is 4.67 because half the planet sees it as salvation and the other half is still clutching their gold bars like it's 1930. Which means Bitcoin is exactly where it's always been, the chaos option. We're bringing Joe back. Joe, this Cornell survey gave Bitcoin a global trust score of 4.67 out of 10. That's like a D+. Should we be worried that half the world still sees Bitcoin as a casino chip?
I mean, I think there's a couple of ways of looking at this, right? And I think you made the point very clearly that in parts of the world where there is a little bit less trust in one's government and one's financial system, Bitcoin sells itself. And certainly Xapo's origins with our founder Wences Casares in Argentina came out of seeing his family go through multiple financial crises in Argentina and lose all of their money and all of their savings and have to start again, not once, not twice, but 3 times. I think hindsight is often 2020, and when you've lived through an economic crisis that devastates a nation's wealth and prosperity, something like Bitcoin really doesn't need a marketing team. I think the rest of the world has yet to potentially experience a devastating financial crisis. Not to say that 2008 wasn't terrible, but back then Bitcoin was spawned. So I think we await and see what happens when hopefully people get a bit ahead of the curve and start to stack some sats as a hedge. But to be honest, these results do not surprise me very much. Again, considering the bad name that Bitcoin and Bitcoin lumped into crypto as a whole has been given over the last 10, 12 years. So I do think doesn't surprise me, and I don't think it's a negative sign. I think it just shows that half the world is still a market to be tapped.
Yeah, I think that's a good point. It's one of those things that I think that's kind of part of human nature. It's like we don't look for alternatives unless we really feel like our main option is broken. So it's if it's not broke, don't fix it to a lot of people, but they're just not broken enough yet. And you see in those countries, like you mentioned, Argentina and a lot of these South American nations that have crazy inflation, it's very broken apparent there. So they are more likely to look for other options when you have other parts of the world where it doesn't seem so broken yet. So they're like, we'll just chill here for a while. In fact, 10 countries trusted Bitcoin more than their governments, while you have places like Japan and Switzerland that just couldn't care less. Does this prove that Bitcoin is less about technology and more about how broken your local institutions are?
It's a great question. I think it's about both, right? I think the technology that it has created and enabled Bitcoin, which I think not too many people really fully understand or want to get into, but it's fully decentralized nature, and the fact that there isn't a central Bitcoin bank governor setting interest rates and deciding on money supply. That is the technology that makes it such an attractive alternative option to a failing local currency or economic system. So I do think it proves a point that perhaps awareness is more easily found, at least in countries that are experiencing or have experienced these situations. And I think the technology for most people is not fully understood and is neither here nor there. But what is very important for people to understand is that Bitcoin is available to you no matter where you live in the world as a means to protect your wealth from your local environment and to spend it freely, obviously within the rules and realms of the regulations that govern it. And that is what Xapo Bank was established to be, a place where anyone in the world could secure and grow their wealth so that you don't have to lose everything when your central bank governor decides to do something crazy, or your government, whatever it may be.
Yeah, absolutely. And then the survey showed that financial stress, I guess, is what tends to drive Bitcoin adoption much of the time. Is the brutal truth here that Bitcoin's best marketing campaign is in fact economic pain? And if so, does that mean adoption only accelerates as debt spirals get worse?
I think it's definitely a starting point for adoption because, as I said, I think it becomes a no-brainer when you see the alternative as a rapidly devaluing currency, being governed by an incompetent government or an incompetent central bank. I think that is why it's seeing such early adoption and such uptake in countries like Nigeria and South Africa and Turkey. I actually just recently flew through Turkey on my way back to South Africa from my break. And when you arrive at the airport, all of the walkways are sponsored by BTC Turk. The airport has BTC Bitcoin advertising all over it. I think it's definitely the easiest gateway into the world of crypto, but the world of Bitcoin specifically. But I don't think it's the only one. And I do think as we start to see global economic uncertainty become more of a reality and global politics becoming less and less certain and stable, something that is an alternative to what we already have, even if you're in a very stable country, starts to become something that you consider. And that consideration phase is where I think a lot of the more developed world is still in, where the emerging markets are very much already adopters. So I do think it's maybe not the only selling point, but certainly the obvious one that's driven a lot of the early emerging market adoption. So let's see. I think further corporate allocations and balance sheets, more ETFs, and more regulated financial institutions offering this as a service is going to make it a far more accessible and secure looking and actually secure asset all over the world, not just in those that have felt the pain of hyperinflation.
Yeah, and kind of back to what we were talking about earlier, psychology at its most fundamental seems to be like the biggest human driver, and people fear certainly being one of those, and the fear of missing out, right? So it's like people need to see the fact that they're either going to be too late to the party or that they need an alternative because their current circumstance are absolutely dire. And so it's not surprising that, that seems to be very much part of the main driver of adoption. But again, there are a lot of factors at play, like you mentioned, so, Joe, we got to let you go. Before we do, though, always appreciate having you on the show, and I'm sure plenty of our audience members do too, and they would love to learn more about you and everything you and the team over at Xapo Bank are doing. What's the best place I can send them to get more information about all the amazing products you and the team offer?
Great question. Feel free, please check us out on Twitter at Xapo Bank. We have a LinkedIn presence as well, also Xapo Bank. But Twitter, we have a great, Bitcoin Adam handling everything for us there. We post all of our upcoming Roxom appearances, as well as our own Xapo talks that we have from time to time. So follow us on Twitter and or X as it's now known. Sorry, I'm still a millennial left over from the early days. And we'll keep you up to date. Best case scenario, become a Xapo Bank member, and then we will be right there on your phone, always keeping you safe and growing your wealth.
Love it. Only place to bank your Bitcoin for my dollar, or my Bitcoin for that matter. So Joe, always a pleasure having you, and hope to see you again soon, real buddy. Thank you for your time today.
Thanks so much, Ang. Love it. See you soon.
Cheers. All right, we're going to a quick break, but when we come back, we have Blockchain Without Borders coming up. Let's see what's going on in other parts of the world. We'll have that and more when we're back. Stay tuned.